Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Monday, the 17th of August. And apologies in advance for having so many stocks here today, but impossible to narrow it down to any smaller number than we've got here today, as we are obviously in a bit of a boom in the small caps area, probably the best boom since the dot-com bubble. Hopefully it'll end in a happier way than that did. Starting off with 7 Digital, where you can see that the shares broke out of that. Well, actually, the first point to note is that they broke the initial target there, 0.8 pence last week. Second point is the mid-move consolidation, the bull flag there. Bull flag breakout today through 1.4 pence. And for those still enjoying the ride, the best call in terms of what or how far the shares could still go. Best case scenario target at the moment at April 2019 resistance line heading towards 3.3 pence. In terms of the money management, the old peak there in March last year at 1.86 pence. So above that, we could still stretch to 3.3 pence over the next few days, or the way things are going at the moment, the next few hours. Next is a stock which people seem to be slightly obsessed by at the moment. Amigo. I read somewhere that I think the results are coming out on the 28th of August, so that should be fun for all concerned. But in the meantime, it's just about really this 50-day moving average. The shares toying with that blue line there around 9 pence at the moment. Ideally, to be, let's say, more confident about the stock's upside, we want to see an end-of-day close above the 50-day line. So far, we're not quite getting that. You can see that in June, the shares failed at the 50-day line, as they did last month after a brief spike through it. So above the 50-day line would then take, hopefully, the shares up to the top of that little trend channel from last month at 14 pence. Stop loss at the moment, and obviously that's quite important for this situation, back at 8 pence or 8.2 pence, probably the 20-day moving average, and also that July uptrend line. Barron Oil is the next contender. Here you can see that the shares are trying to break through that line of resistance there from June. We need an end-of-day close above 0.1 pence to open up the prospect of a move to the top of that rising trend channel from back in March up to 0.17. The plus points at the moment are the way that the RSI has bounced above the neutral 50 level, and the way that the near-term moving averages, I think all of them are actually moving up at the moment. So that is normally a leading indicator on further upside. Be cautious on the shares, maybe wait for an end-of-day close above the August peak at 0.11 pence before considering the long argument. Normally, a stock which is mentioned in the minus column has a brief blip to the upside and then comes back again, but today, Biotrol has defied history and also broken through the old peak there from April, 7.4 pence. So above 7.4 pence on an end-of-day close basis. We're looking for further upside, especially after today's gap through the 50-day moving average, or above the 50-day moving average at 6 pence. Initial target there, the top of that rising trend channel from March, just shy of 10 pence. Best case scenario target over the next month or so, up to that January resistance line projection, currently heading through 15 pence. So above 7.5 up to 15, hopefully, for Biotrol over the next few weeks. Phalanx has had a rather tortuous journey, both fundamentally and in terms of the share price, but with the post-COVID environment helping stocks like this, working from home, etc., we've seen a gap higher today, breaking that line of resistance from September. At least while we're above the gap and above the bottom of the gap, rather, at 1.6 pence on an end-of-day close basis, we could see the start of a journey towards the top of that rising trend channel from June last year, heading towards 3.2 pence. Hopefully by the end of next month, perhaps the end of October, on that situation. Always good to look at a stock which has been hammered by the bears and where they've failed. And in this case, we're looking at Iconic Labs. Here you can see that we had a good weekly close for the shares on Friday above the 50-day line at 0.12 pence. We've rallied strongly since then. The view at this stage is really that at least while we're above that the last July peak at 0.16 pence on an end-of-day close basis, we could head up towards that May resistance line projection, heading towards 0.45 or up to the 200-day line as high as 0.49. I think I've covered this before with the same crazy-looking target, but it's looking slightly less crazy after today's move, somewhat reminiscent of the Supply Me chart, I would say. Going on to a stock which I've seen always gets good coverage on FinTwit, Mossman Oil and Gas. The highlight here really is that shares breaking through the 200-day moving average finally after trying to do so for the whole of this month. That's at 0.15 pence, and an end-of-day close above that could set us on the journey towards the top of the rising trend channel from March, currently pointing as high as 0.3 pence or a little bit more. Stop loss probably back below the 50-day line now. 0.12 would be sufficient for that. Also mentioned in the mail yesterday was Occio, which is decided to bounce after a recent weakness. We actually had an island top on the shares as of the middle of last week, so that wasn't looking too clever. But got a gap high. Well, we filled the gap, and likely, as long as we close above the gap today at 14.5, or while we're above 14.5 pence, the shares look to have resumed their upside argument. If you're not in the stock looking for a buy trigger, that would be an end of day close above that August resistance line, currently running at 17.5 pence. So end of day close at 17.5 or higher could take the shares up to the best case scenario target over the next 2 to 3 months, as high as 35 pence at the top of that rising 1-year trend channel. On to a stock where there's been yet more stake building reported this morning. Pires, I think the standing order on the stock was that above 3 pence we're looking up to the 7 pence level at the top of that rising 1-year trend channel. That's been improved a bit now, so we can probably say while we're above the 50-day line at 3.5, we're going up to 7 pence. An end-of-day close today above recent neckline resistance and the initial August resistance at 3.6 pence would further build confidence that the stock is on its way. But with the 200-day moving average rising at 2.95 pence, it looks as though the shares are on their way. Next up, a stock which is nice to get into situations which are just starting. Remote monitored systems, after a long gestation period, months since April of being in a range around 0.3 pence. Looks like we're finally breaking out. We had a couple of false dawns last month, but this time with this very solid green candle today, an end-of-day close above the 200-day line should be enough now to take the shares to the next stage, especially above Friday's 0.34 peak would really help. The target here up to the top of that rising trend channel that I've drawn from December at 0.65, obviously retesting that brief April spike that we had. Stock that I've never heard of before, which is always a new experience. SEC Newgate gapped higher, a couple of gaps higher over the last couple of sessions, and the view here is that while we're above that old December resistance at 43.5 pence, we could see further upside, hopefully towards the top of that broadening triangle up from September up to the 80 pence level. Only at this stage well below 40 pence really would delay the upside scenario. An extremely volatile stock which is bouncing today is Seagate, if it comes through, and nice setup here with this recent consolidation below 2 pence. A nice end of day close here above 2 pence and preferably above the initial August resistance at 2.5. Would then set the shares on their way for a partial or even full retest of the June spike towards 7 pence. Initial target there above 2.5 up to 4 pence. Stock of the day, and maybe one of the stocks of the year, the way things are going, is Supply Me Capital. Great victory for the anti-bears on this one, but plenty of people trying to cast out on the stock, but it's actually hit the rather crazy sounding target that was here last week, 0.6 pence, and looks like it is actually intent on delivering a little more. I'm not quite sure how much more we could get out of this, but something like that trend line from April at 0.9 pence could be the best case scenario target for the shares that one can dig out. That's the sort of top of the broader triangle for the shares. So probably at this stage, while we're above 0.5, looking for up to 0.9 on Supply Me over the next few days, the way things are going. But obviously, we've had a great run, and it's a great 10-bagger for this month. Less spectacular, the last stock of the day, but still good to see. Valerix breaking now that little consolidation the shares had just around the 15 pence level. But at least while we're above 15 pence, or if we get an end-of-day close above 15, we can upgrade the shares up to the top of that trend channel from April, currently heading up to 30 pence as soon as the end of next month. At this stage, only really back below 12 pence, and that July peak really delaying the upside scenario. That's it from me today. Sorry about so many stocks, but all quite exciting at the moment.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.